Hello everybody! Today I will present you a very powerful tool which is extremely useful for portfolio management. It's free and you can use it to backtest your ideas, to assess with Monte Carlo simulation the potential performance of your investments and to make better decisions using tactical asset allocation. I'm not affiliated on anything with this website. I'm simply using for myself, and I think that is a great tool which every investor needs in order to overperform the market. Please guys, subscribe and thumbs up. The tool I want to introduce you today is called Portfolio Visualizer. And it's extremely powerful because it provides you for free a number of very valuable analyses which are needed to take wise decisions in financial markets. First of all, when you log in, and it's completely free, you arrive at this screen, okay? And you see that you have 6 main tools here: backtest portfolio, factor analysis, asset analytics, Monte Carlo simulation, portfolio optimization, and timing models. Today I will briefly introduce 3 of them because they are the easiest to understand even for non-professional investors. First of all, let's look at asset analytics. You click on the first link, which is fund screener, and you end up observing this desktop image. You can choose at first the fund type, which in this case I decided is ETF. ETF are funds which are not managed by humans, so they follow a fixed strategy which can be as easy as to invest in an index and as complex as following a very sophisticated trading strategy. But the characteristic is that no human's decision are involved, okay? So, while in the other case, mutual funds, there is the human component, so there is a portfolio manager who is ultimately taking decision about where and how to invest. After that, you can choose which is the asset class you are keen on. So in this case, let's say I am keen on international equity, okay? And then you can even take a more detailed choice about where to invest. And in this case, I am care about Europe stock, okay? And after that, I simply have to choose the expenses ratio I am keen on. So how much I'm charged every year independently on the fund performance. And in this case, I say 0.25 is the maximum I want to pay, so 25 basis points per year, which makes sense for an ETF. And let's update the table. And here is a list of funds which are included in this set, which was decided by you in your previous selection, okay? And so here you see the year-to-date, 1 year performance, 3 years and 5 year, plus the Sharpe ratio, Shortino, which is a similar measure, volatility, which is a measure of risk, and other metrics, which I don't want to detail because it would be too advanced for you guys, but I think that this simple tool gives you a first very simple yet effective way to check at the performance of different funds, okay? And now you see a lot of negative returns because we are in the middle of the coronavirus crisis, so nothing to be surprised that performance this year are very poor for mutual funds, but still this tool is very useful. After that, let's look at the backtest portfolio. Backtest portfolio basically is a way to assess the past performance of a given asset class or a given portfolio, okay? So what you want to see is how would have a given asset or a given portfolio performed in the past. When you choose backtest asset allocation, okay, you see this list. You can choose the start year, the end year, which in this case I leave to the maximum, the initial amount, which for sake of simplicity, I leave at $10,000. Cash flows, I select none, so I don't want to make periodic withdrawal, and how often you want to rebalance the portfolio. In this case, I'm saying let's rebalance it on quarterly basis, okay? No benchmark, and then here you can select the asset class you care about. So let's say I want to create a portfolio which include large cap for 40%, and then some gold for another 30%, and after that I would include some emerging market for other 30%. And let's run the backtest, and simple enough, you have from 1995 up to now. When I'm talking, we are in at the end of March 2020, the performance would have been of 8% per year, okay? So you would have multiplied your initial investment by 7 times, with a worst year of minus 31% and a best year of 40%, okay? Now, it's important this because it helps you gain a first insight even about the potential risk you're taking. So this is the drawdown, which is basically the maximum distance between the peak and the subsequent bottom. So which is the maximum difference between a peak in your performance and a subsequent bottom. And here you see that, but it provides you a number of other tools, like for example, it tells you which is the value at risk at 5%, which is a measure of risk that you are taking. And so it's very rich analysis, and I highly encourage you guys to play with this tool and to get familiar with it. After that, I want to show another feature of this very nice tool, which is Monte Carlo simulation. And here we see that you can choose your initial investment and the asset classes. You can even choose individual funds if you want, but in this scenario, to keep it simple, I will simply select asset classes, and I will adjust for inflation, and I will say that I want to withdraw on quarterly basis, and the simulation period is 30 years. Okay, I will use historical returns for making simulations, and after that I'm ready to select what I want to put inside my portfolio. In this case, I will put some emerging markets, some US mid-cap, and some precious metal fund. So I can choose now. I have to add the different weights, and I am ready to run the simulation. And here is the outcome of the simulation. Okay, we see which is the chance of experience extremely negative or positive returns. Okay, so your 19th percentile of all your distribution provide you a returns of 40,45%, while extreme negative percentiles of your return distribution is still positive and is equal to 2.58%. So this portfolio is pretty stable. It gives you a very good edge, and I even encourage you guys to consider it for real. Okay, I recommend you guys to go through this tool, look it very carefully, mostly on its very cool timing models, play with it and try to get familiar, because it's really a tool which gives you a tons of possibilities, a tons of free analysis, which can be highly beneficial for each investor. What do you think about this software? Which feature did you enjoy most? What do you think can be improved? Please leave a comment below, and I will try to give my idea and my suggestion on how to make the best possible use of the tool I am presenting today. Thank you for the attention. Bye bye.